Wanted to talk about KHB Stock, the Select Sector Homebuilders ETF. This is a sector that will do very well considering supply and demand for the housing market. Right now, with mortgage rates starting to fall, you're seeing these stocks within XHB, the homebuilder stocks, individually moving back upward. This is simple supply and demand and basic economics that with the lower mortgage rates, you're going to see more and more individuals entering into the housing market. Because of that, these stocks are starting to take off. When you break down the broader stock market, then you compare it to XHB stock, the Homebuilders ETF, there's some very undervalued stocks in there. Now, the caveat to all this is simply this. What happens to future interest rates? My take is we maintain a level 4 interest rates broadly speaking. The mortgage level may drop somewhat considering future, and because of this, you'll see these companies, should they hit their revenue and profit targets, these stocks are going to take off. Let's jump in. We'll take a look at XHB Stock, the Homebuilders ETF Select Sector. Let's jump into the computer. If you're just finding my channel for the first time, thanks so much for stopping by. First and foremost, I am an economist. I break down how the economy is working. I look at the stock market as an indicator, and it's reactive to the broader economy. Given that, what I want to break down right now, XHB Stock, the Homebuilders ETF Select Sector. Here we're looking at that particular stock versus the SPY stock, which of course is the S&P 500 ETF as well. SPY is up 202% in the past, those are about 15 years. Whereas recently, the home builders have really taken off an extra 125% above what SPY has been doing. And this is really has a lot to do with how skewed the house prices are, how skewed the housing industry is in general. Now, what happened? A quick breakdown, real quick. When the COVID hit, the Federal Reserve dropped interest rates to near zero, getting them as low as they possibly could to goose the economy as best it could. Okay? For every action, there's an equal and opposite reaction. Mortgage rates went sub 3%. Everybody that could refinanced their homes. Anybody else bought new homes, bought homes in general. This pushed the entire industry. Now, keep in mind, those individuals who purchased those homes at 3% or refinanced at 3%, they're not going to do anything with their houses effectively for 30 years. They're sitting on 3.25%, 3.5% mortgage rate. Right now, we're looking at a much higher mortgage rate. This would add 50% of the cost, if not higher, depending on the individual. So that supply of homes effectively doesn't exist. Now, what might happen is, and we're seeing this, those who did buy into those homes, maybe starter homes, are renting out those homes. They're what we call accidental landlords. They don't want to get rid of these houses because the mortgage rates are so low. They're already building up equity, and now they can rent out these homes. Well, that's less home supply. Builders themselves have been skewed for some time, going all the way back to 2008 with the housing crisis. With prices moving higher, profits are available, and that's why we're seeing the Home Builders ETF moving much higher than the S&P 500. Here's a quick breakdown. Now, over the holiday break, I updated all my spreadsheets. And what I do is I take each individual stock with one share, asking the questions, earnings per share. I don't weight this. And this is just because I want to know what each individual stock is going to do. This is the entire list of what's inside XHB, the Homebuilders ETF. And if you scan through there, there's 2, 4, 5, 6, 7, 8 stocks that are trading in double digits earnings per share yield considering today's price. Again, supply and demand is so skewed. So if these home builders like Toll Brothers and others start building and really start pushing product out there, should they be able to hire enough employees to builders to actually get the jobs done? There's profits to be made on a much higher level from a yield perspective. You take the next 4 quarters, you add them together, divide that over to today's current price, that gives you your future yield. The benchmark investment rate is the 10-year treasury, the safest investment out there, purportedly 4%. Well, you're looking at some of these home builders are trading at, say, 12% future yield. Now, of course, that's not your dividend, but it is your yield. Effectively, the stock market would fix that. That investors, savvy investors, will chase after these individual home builder stocks and push price upward. We're already seeing XHB stock, by and large, pushing well above the S&P 500. Now, there are caveats, of course, and one of the biggest is of the mortgage rate. What will happen to mortgages? As of Friday, 6.62%, broadly speaking, across the United States. This is, from an historical perspective, not terrible. If we saw sub 6.5, maybe a range between 5 and 6, 6.25, 6.5, that is affordable. When we were pushing 8%, that extra 0.5% starts to add up, and home prices are less affordable. The problem with that is the skew in supply. Now I want to take a look at price in general. This is the Case-Shiller Home Price Index. And as you can see, a huge surge starting in 2020. Of course, we had the housing collapse back in 2008. The correction, mostly speaking, between, say, 2012 up to 2020, home prices moved as they should. But supply has constantly been too low. Sort of like the diamond industry. Maybe these home builders are controlling supply on some level. I don't exactly subscribe to that because by and large, these companies are driven by profits, and if they can, they should. And each individual acting on their own would undercut their competition just across the street. So on some level, yeah, maybe there are problems getting supply to the market. On another level, why dump the market with too much supply? Price would drop. So there's probably going to be a little bit of this going on going forward. But it does go back to the mortgage rate. Interest rates, in my opinion, are probably going to remain kind of flatline at these levels. We may see the mortgage rate 6.25, 6, 5 3/4, kind of moving up and down in that kind of range as the market or the economy kind of moves forward. Those home builders, just like the diamond sellers, are kind of locking in profits by not dumping supply onto the market, supply which continues to narrow more and more simply because people aren't selling their homes. These home builders are sitting on a gold mine. You'll see some perform more, putting supply out there. Nonetheless, I see the home builders outperforming the S&P 500 for some time. I'm going to break down a bunch of the other stocks. I want to kind of, in some future videos, take a look at some of these stocks, breaking them down individually, showing how their revenues and profits are going to be increasing and why individually each of those stocks will perform well. But XHB stock, I think, is going to outperform the S&P 500 for some time. Make sure to hit that like and follow button. What I do is I break down stocks relative to the economy, then the individual stocks from a value perspective. This is a new channel growing very rapidly. Thanks so much. Hit the like and follow button. See you in the next video.